everybody feeling? Good, relatively. We have a couple things to talk about, but we're gonna save that for the end.
Yeah, some important things to share. But for now, let's welcome Mr. Bill Foote for the finance workshop.
All set? Did you have stuff you were going to get to first, or we're ready to roll?
We're ready to roll. Yeah, we'll
Okay.
save that for the end. Thank you.
All right. Let's see if okay. Well, thanks for having me, everybody. I'm happy to be here. Was anybody here? Did anybody suffer through my financials workshop last year, by any chance? Good. Okay. So I gave a similar workshop last year, and like I said, excited to be back and to talk with you all here, hear your points of view, and answer whatever questions I can answer. So I'm going to take about 20 or so minutes and just go through a handful of slides, kind of a crash course in, financial statements, projections, cost-benefit analysis, things like that. Okay? But like I said, we'll spend the majority of the time doing Q&A. Mike, will they have a copy of these slides?
Yes.
Okay, so if anybody wants to get in touch with me, I've got my card, but my contact information is here. Just by way of background, I work just up the street at an accounting firm called Aronson LLC, just up the street in Rockville. So here's our agenda. We'll hit some financial statement basics, okay? Basically just not to try to teach you any kind of accounting or debits and credits, but really just as background for the other topics, okay, which are going to include cost classification, how to price goods and services, discussion around that topic, break-even analysis, and then prospective financial information, okay, meaning forecasts and projections. Okay, so has anybody ever heard of any of these financial statements before? Balance sheet, income statement, statement of cash flows. Okay, so these are the basic financial statements. Okay, and so financial statements at a very high level tell you where a company's money came from, where it went, and where it is now. Okay, and depending on which one of those questions you want to answer, you might be more likely to look at one of these four financial statements. Balance sheet is a snapshot that's going to show you your assets and liabilities at a particular point in time. Income statement is going to show you your operating results, revenue and profit for a period of time, say a year. Okay, and the income statement is going to be most of what we're focused on today, right? Because we're thinking about how can we conceptualize an idea, bring it to market potentially, hopefully generate revenue, and maybe if we're lucky, actually generate profit as well. So we'll be income statement focused here. Which turns out to be a good segue since that was my next slide. So has everybody heard the term top line and bottom line? Yeah? There's a couple folks shaking their heads. So what on an income statement, and this is a little hard to see on this screen, but so for those who can't see, these are just different line items you might see on an income statement. Revenue, gross profit, that's one measure of profit. Income from operations, that's another measure of profit. Income before taxes, net income. Okay, again, different measures of profit. So, easy question, when we're talking about top line, quote unquote, what are we talking about? Revenue. And if we're talking about bottom line, we're talking about net income. You got it. And obviously, we can't have net income if we don't have revenue, right? However, we can have revenue and not have net income, right? We could have a loss. And for for most startup companies, there's a period of time during which they're not profitable and they're generating losses, not income. Okay, so on those startup company profit and loss reports or income statements, this bottom line may say net loss instead of net income. Okay, but just in terms of general terminologies, don't confuse revenue with profit or net income. Right, two different things, related obviously, but two different things. Okay, so balance sheet, income statement, statement of cash flows. Why do these exist? How are they used? Who uses them? Management of the company. The bank, right? If a bank is going to lend a company money, they want to see the financial statements in order to understand their exposure, maybe to make that lending decision in the first place. Shareholders, analysts, outside accountants, regulators, and potential investors. So in this Raptor tank world, right, potential investors would, I think, probably be the most relevant financial statement users from your perspective. Okay. Anybody have any questions so far? Is everybody having fun?
Yeah.
Yep. Okay, so cost classification. 3 broad buckets of costs: variable costs, fixed costs, and then what I've described here as mixed costs. Okay, so, and these are important to understand for startups, okay, or if you're trying to develop a business plan. It's important to understand the general meaning of those terms. Okay, so variable costs, they're directly linked to the production of products or services. Okay, so there's a direct linkage, okay, between revenue and the cost. And so, for example, as the variable costs would increase as sales increase, variable costs would decrease as sales decrease. Okay, maybe not dollar for dollar, or maybe not even in a the same percentage of sales, but directionally, that's how it would work. And we'll look at an example of an actual income statement in a couple minutes. And in terms of captions that you see on an income statement, right? Sometimes you'll see direct costs or cost of goods sold. Has anybody ever heard that term, cost of goods sold? Right? Those typically are going to be variable costs. At least in large part, they're going to be variable costs. Fixed costs, on the other hand, they don't move, in lockstep with increases in revenue or decreases in revenue. Right? Fixed costs, in large part, you're going to incur. The business is going to incur, regardless of what level of sales are generated. Okay? So really important to understand fixed costs because companies on the hook for those regardless. And in terms of captions on an income statement that you might see indirect costs or operating expenses. These would often be in that fixed cost category. And then this third bucket is a hybrid, right? So we have a variable portion and we have a fixed portion. And so this could be, just by way of example, you could have, let's say, executive compensation, right? Let's say you've got an executive who gets a base salary, right? That would be, you could consider that fixed. But that individual also has some incentive compensation that's tied to sales. Okay, and that piece is variable, right? Because it would depend, it would be contingent on the level of sales that are generated. So So at a high level, do those concepts, fixed and variable costs, make sense? Another example of a fixed cost that probably the most common example of a fixed cost would be like rent or office lease, equipment lease, right? You got to pay your landlord whether you're generating revenue or not, whether you're profitable or unprofitable, okay? And just one other little side note, right? Fixed costs are not constant. They're not necessarily constant. Your rent payment might be the same exact amount, month in, month out, but fixed in this sense doesn't mean that it's always the same exact amount. It's more speaking to the nature of the cost itself. Okay, so can anybody give me any examples of a variable cost? I'll make it easier. Let's say in a fast food restaurant, what might be an example of a variable cost of running that kind of a business? Yes, sir.
Like ingredients of a hamburger, because like let's say there's a disease of cows, then beef is going to be like more valuable, thus is going to go up.
Yeah. Yep. So raw materials, right? Ingredients in food service, those are going to ebb and flow with the amount of sales, right? So in that same example, say a fast food restaurant, can anybody think of a fixed cost? Whether there's a line out the door, or whether there's not a customer in sight. Yes, sir.
Space.
Yeah. Yeah, and that's probably a big part of the cost structure, right? And another variable cost, I think, it's not. It sometimes is can be significant, but in operations, retail operations, where there's a lot of transactions being settled with credit, there's credit card fees, and those credit card fees are variable costs, right? They depend on the amount of revenue, right? The amount of sales. And just before we move on, I guess another example of variable costs that might be important for you entrepreneurs and startup companies, right? If you've got folks that are charged with driving sales and generating sales, okay, and if those, to the extent those folks are paid on a commission basis, right? So that is a variable cost. The commission compensation would be a variable cost.
Just before we move on, I want to make sure you guys are getting the most out of this workshop as it pertains to your businesses. So are any of you who are doing, working with software as a part of your business concerned about this? I saw you nodding your head. You can speak up and ask questions.
Yeah. So when you're selling.
Yeah, and I should have said at the start, folks, but obviously just interrupt me at any time. Ask questions. Raise your hand if you want to. If not, just say, hey, and we'll stop.
Yeah, so when you're selling like a digital product, if the cost of goods sold is like you buy it one time and then you're just making copies of it and you're selling that, would you do like the same? Would you calculate like the cost incurred or just the one time for the fee?
So this is a software.
Yeah.
And so I'm sorry. Say it one more time.
So like you only have to buy it once and then you're just selling like different copies of it.
So you're saying the upfront cost?
Yeah, like the upfront cost. Let's say it's $5 and then you're selling like for 15. But would you just calculate like cost of goods sold on your taxes is like one time $5, or like every sale you would deduct the cost of goods sold?
I'm not sure if I can answer that question precisely, but generally speaking, right, that sounds like a variable cost, right? And it may, if I understand your question, it may kind of go to the income statement in proportion with the units that are sold. Does anybody have any other questions or comments?
What would be an example of a mixed cost?
A mixed cost. Let's see. So I gave one earlier. Let me think of another one.
Sorry, what was the one you gave earlier?
I think I mentioned earlier, like a compensation package, right? Where you have a base compensation and then an incentive piece that's tied to sales. You could have, let's see. Let's say you had a warehouse. Okay, so variable costs generally, they're kind of not exactly linear, but in general, right? They're kind of linear, as opposed to fixed costs, which are not linear, are not just kind of flat. Let's say you had a warehouse, right? In your warehouse, and you're selling widgets, right? And your warehouse can has a defined capacity, right? And so up until you get to a certain volume, that warehouse is enough, right, to handle your operations. But at some point, you're going to need another, let's say another warehouse or a bigger warehouse, right? So you could have, a situation where it's like almost like steps, right? It's fixed for a while until you kind of outstrip your capacity. And so we've talked a little bit about wages, right? And depending on what your business idea is, will depend. Will kind of, your business may be more or less dependent on wages. But just general question: can wages be variable and fixed depending on the type of, depending on the job description, let's say? Yeah, and so let's say you have going back to the warehouse example, let's say you have somebody working in the warehouse, or you have somebody working on the assembly line, if you will. Those might be more akin to variable costs as opposed to somebody in management, right, which would be more of a fixed cost. So here's the income statement example that I mentioned. It's a little hard to see. Don't worry about the numbers, okay? But I just wanted to put the general kind of structure of an income statement in context. So you see, if you remember from a couple slides back, here's top line, which is revenue, right? Bottom line, way down here, is net income. Below revenue, we have something called cost of goods sold, right? And that's what I mentioned earlier. Typically those are going to be variable type costs. We take revenue, we subtract cost of goods sold, we get something called gross profit. Okay. From gross profit, we then subtract operating expenses. Okay. These are going to be things that are more likely to be fixed costs. Okay. You had a big bucket of costs here called general and administrative, right? And that's potentially where you're going to see rent expense and some other fixed costs. Isn't that exciting, though? It's an actual income statement. When you woke up this morning, did you ever believe that you would see an actual income statement today? Is that the most exciting thing you've seen today? Okay. So you have an idea for a widget. You got to think about how to price it. Okay. So there's no there's different ways you can go about this. Intuitively, at least for me, an easy way to think about it is what will it cost to make the widget, right? And then take that cost and add some percentage markup. Alternatively, the other end of the spectrum, you've got market rates. So concept being, what will the market bear? Okay, and so that would be another way to establish a selling price. And in that context, conceivably, if somebody else is selling a similar product, right? Or if your idea already exists in the market in some other form, you could identify who your competitors are, if there are any, and see what are they selling, how are they pricing their goods or services. So that, in terms of methodology, those are a couple options. Strategically, right, you might be motivated to, your motivations might affect how you price your products and services. Do you want to capture market share, or are you really looking to maximize profits? And then market dynamics. If you have something very novel and unique, and you're truly the or one of the initial entrants into the market, and the demand is there, right? That's quite a bit different than a situation where it's a product in the later stages of the life cycle, the market's saturated, extremely competitive, more of a commodity, right? So in terms of you as the entrepreneur, in terms of the ability to dictate and establish a selling price that you want, would you think that if you're the initial entrant into the market, you would have more ability to do that, or later on when the market is saturated? Yeah. So let's say you have some coveted new technology gadget, right, and you're the first to market. That's a good thing. How are we doing on time? Good. And just I guess by a show of hands on that concept, does everybody here have a business concept or an idea? It just in general, this might not be a yes or no question, but raise your hand if your idea is completely brand new and novel. All right, and then raise your hand if your idea is, say, a new take on an existing product or service. Okay. Okay. So one of the other topics that was on the list was break-even analysis, and this is kind of a boring accounting topic, perhaps, but pretty important to understand when you're just getting going. So I've got two examples here. We don't have to spend a whole lot of time. I think just conceptually, the thing to think about is when we're talking about break-even analysis, the concept is, when do I have revenue or sales that are going to cover my costs? And when I say cover my costs, right, we're talking about both fixed costs and variable costs. Okay, so in this example, okay, or illustration as I've called it, right, the question is, how many widgets must we sell during the next 12 months? Okay, so how many must we sell in order to break even? Okay, and break even, again, meaning revenue equals costs. Right? So profit equals, if revenue equals total cost, what does profit equal? 0. That's right. Was not a trick question. Might have been a stupid question, but it was not a trick question. Okay, so fixed costs are known, variable costs are known, the selling price of the widget is known, and we want to solve for the break-even sales volume. So how many units do we have to sell over the next 12 months in order to break even? Okay, and so down here, I've kind of given you the math. So A, B, C, D, E, F, G on the left. Over here is kind of the math for how you solve for the number of units. If we've got fixed costs of $100,000, we know our cost per unit, our variable cost per unit is $500, and we've established that we're going to sell it for $750. Okay, that gives us a contribution profit of $250. So just B minus C. And that gives us a contribution margin, meaning as a percentage of revenue. So when you see a profit margin, whether it's gross profit margin or operating margin or net margin, margin is going to, when you hear the term margin, be thinking percentage of revenue. Okay? So our contribution margin here is 33%. Okay? Which is our contribution profit of $250 divided by the selling price of $750. Okay? And so if we take our fixed costs, right, and we divide by our contribution margin of 33%, we get a break-even revenue figure of $300,000 in this example. Okay? And so that's really the math that you're solving for. And then the number of units is simply the 300,000 divided by the 750 per unit, right? So if you're really a glutton for punishment, when you get home tonight, as you're watching the Nationals win again, you can work through these, the math and make sure I've got it right. But what you'll find is that if you take your revenue minus your variable costs minus your fixed costs, you get to a profit of 0. Okay. So alternatively, in illustration 2, we're looking at how much should we sell the widget for. Okay. This example, it's over the next quarter. Basically, it's all the same math. Okay. It's just a question of what are you solving for. So in the first example, we were solving for how many units would need to be sold. Right? We knew what the selling price was. In this illustration, okay, we're solving for how much to sell each unit for. Okay, because we know the fixed costs, we know the variable costs per unit, and we know the demand. Okay, is that realistic? Yeah, probably less so. But the point is just to illustrate you can, any one of these inputs you can solve for. Okay, and then we'll wrap up with prospective financial information. And I think I like that segue going from break-even analysis into forecasts and projections, because when we're talking about break-even analysis, the one thing I don't think I mentioned on the previous 2 slides that you got to think about is when, right? This doesn't all happen in one period necessarily, right? It may happen over a number of quarters. It may happen over a number of years, okay? And so now when we transition into prospective financial information, we're getting a little more detailed and looking at specific multiple time periods into the future, okay? How long are we going to run at a loss before we become profitable? How much capital do we need, whether from an investor or a bank, in order to fund those losses, over that time period? So I think most important to think about in terms of prospective financial information is the income statement. Right? I said we'd be income statement focused. And if we're preparing a forecast of an income statement, we can do it, generally in 2 ways: top down or bottom up. Okay, at least as I'd like to think about it. And that basically means, how do you construct the forecast? Okay, bottom up is a more detailed approach, more granular analysis, really taking a hard look at costs. Top down is kind of the opposite. You're more sales forecast driven, and then thinking about costs as they relate to that sales forecast. While I say the focus is the income statement, the balance sheet is also not to be overlooked, because, right, the balance sheet affects cash flow, right? Do you have to borrow? Do you have to maintain a certain level of working capital in order to fund operations? What might you have to invest to execute against your plan? Investing in property and equipment, right? Or some sort of expensive IT infrastructure. Those are investments that might not appear on the income statement, okay, but nonetheless affect cash flows. Lastly, if you're preparing prospective financial information as part of your presentation, make sure you step back after you've kind of put the finishing touches on it. Make sure you step back and look at it with a fresh set of eyes. Ask yourself, does it make sense? Okay, does it look like a hockey stick? And maybe that's okay, but be prepared to answer how you're going to execute that hockey stick forecast. Consider how your forecast stacks up against historical financial statements. Little problem there, in all likelihood, for your businesses when trying to compare to historical financial statements. What would that be? There are no historical financial statements, right? Because this was just an idea a couple months ago. So as an alternative, you could potentially look at industry benchmarks, okay, to see how realistic your forecast might be. And so we covered a lot. Actually, I went longer than I was supposed to go. I apologize. I just get so excited when I'm talking about accounting stuff. So just a couple takeaways. You don't have to be accountants to have an successful business idea, obviously. Might be better if you're not accountants, but don't tell anybody I said that. But you can build credibility with investors, right, if you know the basics. Remember that revenue is not the same thing as profit. And remember that profit is not the same thing as cash flow. Okay? Distinct concepts. Not all costs are created equal, so understand fixed versus variable. Price determination, not cut and dry. Very complex, and that goes beyond accounting, right? Make sure you understand break-even scenarios, at least conceptually. Or in detail, again, if you need something to do tonight, work through those illustrations. Your forecast, okay, make sure you can back it up. If you make a nice, pretty-looking forecast, make sure you'll be able to answer questions about it when they're asked, okay? And then lastly, when you're putting any kind of material together that's going to be presented to either an audience or a potential investor or a group of investors, make sure you put yourself in the reader's shoes or the investor's shoes or the audience's shoes, okay, and think about what are the obvious questions that somebody's going to ask me, okay, where are the weaknesses in my business plan, okay, and be prepared to respond to those weaknesses. And if you have a very complex financial model, okay, I think it's always good to be prepared to say, to be able to speak to the team, right? So if you're not going to go it alone, and you have identified an area where you might have a weakness, okay, it's okay to envision building a management team, right, that's going to play off of your weaknesses, right? So be prepared to think about what you want to do in terms of a management team in the future. That's it. You made it. So, any questions? Yes, sir.
I'm not sure if this is.
So now you're setting the precedent. We're just going to go around. Everybody's got to ask a question all the way around the table.
So,
Thank you.
I'm not sure if this is part of your area as well, but how do you calculate or estimate your company's asset? Not asset, like your value as a company.
So two different concepts. Great question. So his question, did everybody hear his question? How do you determine your company's assets, and then how do you tell me if I'm getting it wrong?
Yeah.
And tell me, and how do you determine your company's value? Okay, from an accounting standpoint, when you look at your company's balance sheet, okay, you look at the balance sheet, it's going to show you your assets on one side and your liabilities and net assets on the other. Okay, left side is the assets. Okay, it's going to show you your cash, your accounts receivable, etc. Okay, fixed assets, equipment. That's the accounting measurement. Okay, that's generally accepted accounting principles. Generally accepted accounting principles is not fair market value or fair value or really any kind of value. It's more of a historical cost, right? So just to give you one example, let's say you purchased some big piece of equipment that you need in order to manufacture your widgets, okay? On your balance sheet, you're going to see the cost of that big piece of equipment net of depreciation. Okay, depreciation basically is a process whereby the cost of that asset is charged to the income statement. Okay, so it's expensed. Eventually, if you paid $100 for the piece of machinery, it'll eventually on your balance sheet be zero. Okay, maybe over 5 years or something like that. But could that piece of equipment, let's say 5 years later, when the balance sheet shows zero, right? Could it have a value that's different from what the balance sheet shows? Answer is yes, right? And looking at the company as a whole, right? The enterprise as a whole, for most startup companies, companies that anticipate being profitable and generating cash flows at some point, okay, there are going to be assets that exist that are not on the balance sheet. Does anybody have an idea of what kind of assets might exist but not be on the balance sheet? And I let you down because I don't have a picture of a balance sheet to show you guys. You guys would have been really excited if I showed a balance sheet too.
Right. Retained earnings.
Retained earnings, not what I was going for. So retained earnings, you can think of as kind of like your net assets minus liabilities, right? Or your, the net income that you've built up over the years, right? But most of what's going to be on an actual balance sheet is going to be a tangible asset, cash, accounts receivable, equipment. So now, does anybody have an idea now that I said that?
Copyrights or patents.
Yes, ma'am. Intangible assets, right? So intangible assets generally, and just so it could be technology, it could be goodwill of some sort, it could be customer relationships. Those aren't going to show up on your generally accepted accounting principles balance sheet. And yet, that could be the asset that has the most value. Is that too much?
No.
Is that helpful?
So, but then, when you, let's say, present your company's market value, and if people ask, like, how did you get that number? Then would you plainly, like, say, oh, it's because we have this and this technology that we have developed? Although that's not mathematically, like, correct?
Well, I think it just depends on what is it that you're, what does that number represent? Is it really, if you're really talking about the value, right? If you really want to know what's the value of the business, the balance sheet plays in, but not that much, okay? The value is really driven by a host of factors, okay? Importantly, including the ability of the business to generate cash flows in the future, right? Other value drivers are going to include, do you have a good management team in place? What kind of market niche are you in? Do you have a highly skilled workforce? And so all those things are going to contribute to the ability to generate cash flows in the future, right? And you can't see any of that on a balance sheet, sadly. All right, you're up. No, I'm just sorry. But go ahead. If you have one, go ahead.
I'm thinking about it.
Does anybody have any other questions? Yes, sir.
If you have like a physical product as your idea, but you've never made even one version, how can you reasonably estimate costs of production and all that, and figure out the pricing? Because that's going to be a big part of the presentation, I assume. Present that.
Yeah. If it's something that exists, so the short answer would be research. Okay. If it's a product or a service that exists, okay, or it exists in a different form, okay, or if there's some adjacent, some product that's kind of analogous, not the exact same thing, you can look from a selling price standpoint. You can, like I said earlier, you can look at competition, right? If I'm selling a different version of that widget, how much is company A selling that widget for, right? The cost to develop it, though, you're not going to be able to, that's not in the public domain generally for your competition, right? So there, you're left to your own estimating, your own research. From a financial statement and accounting viewpoint, it's possible that you could look, if there are relevant companies in your industry or niche, you could, for example, research public companies, look at their financial statements, read the disclosures, and get a sense of things that way, right? But determining the cost is going to be harder, I think, than the selling price.
Right. Well, you have to actually make one and figure that out, right? But also, some people were estimating like sales instead of projecting sales. How can you project sales? If you haven't even sold one, of your service or good.
Yeah, I think I guess I could answer all these questions by just saying it depends. But it depends, right, on what kind of product, what kind of service. If you've got research available, or it's an established market, right, and you understand the market, you just have to determine what's my share of that market, or can I penetrate that market. That's a bit easier than something you've got a prototype of, right, and you don't know whether it's going to catch on. And I don't have an easy answer for you there. Folks in the highly esteemed back row, anybody have any thoughts there? If you got a prototype.
I think that the research is the key point.
But like for example, in like last year's competition, I saw the girl who quit it.
Yeah.
Like she had financial projections done for sales and stuff, but I don't know if she actually sold it. Right?
Well, she based it as Mr. Foot said. She looked at what the market for those kind of dorm related products were.
Oh yeah, I remember that.
Yeah. And so she looked at, you can say, well, this is where I'm aiming for. This is the size of the market. I think X number, I can get X percentage of that market, and then just made the calculations from there.
Okay, but it doesn't have to be like perfectly concrete,
You just have to, in my opinion, you just have to be rational assumptions that you're making. So
that you can explain.
you might be looking at whether it's novelty items or plot, whichever you do, and trying to look at size of the market, kind of where you're going to sell, and what the size of the market is here. So it's all going to be driven by the research you do, and then the assumptions that you make.
But it is. I would say concrete is probably the last thing that it's going to be. It should be based on sound, estimates
Right.
and research, but it's not gonna be perfect.
The only way for you to like get close to concrete, I guess, is if you made sales already, and then you can estimate by expanding what you're gonna do in sales.
You've got a much better shot, even if you don't have much track record, if you have any track record, that's something to build on.
Okay.
But in that example, right? That's, and I forget what it was called, clip it, right? So, and I'm not speaking for that person, but just in terms of research, I'm not saying it's easy, but it's on the easier side, right? Because if your target market is universities and colleges that have dorms, right? You can quantify how many in a particular geography, how many campuses there are, and which one of those have dorms, and how many rooms per dorm, and how many beds per room, right? And then doesn't mean that's your market necessarily, but it's quantifiable in a meaningful way.
Now, I know we do have more questions, but I think it's important to note Mr. Foote has experience in judging the competition. So, from the judge's perspective, what are some things that you were looking for, maybe in a presentation, or maybe even specifically the financial aspects that you're looking for?
Yeah, so I'll answer those differently. Okay, so on the financial side, I think to me, anything that's forward looking, right? So prospective financial information. Okay. Even though I can, generally speaking, I can understand the details and I might enjoy looking at the details. If it's only 5 minutes, right? It's got to be the KISS principle, right? Or for you guys, KIS. What my mom always told me was KISS, right? So for you guys, keep it simple. What my mom always said to me was keep it simple, stupid. But apply that principle. Keep it simple. Doesn't mean you can't have all the details, right? Doesn't mean you couldn't have built a bottom-up forecast that's beautiful. But when you're presenting it to an audience of lay people or even somebody who can really understand the details, keep it simple. Just present the most important things in summary fashion and nice and neat and rounded, right? Don't like if you have this forecast and it shows you're gonna generate sales next year of $1,532.27. Please round those, right? Don't just put it into thousands, okay? And just make sure it looks pretty, okay? Make sure it's presentable, simple, and that you can answer questions about it, right? I'd say on the financial side, that's the most important thing. A secondary thing, what I kind of alluded to it earlier, is if accounting's not your thing, if finance is not your thing, if you're kind of the idea person, I personally, I think it's okay to, if that's your Achilles heel, and you know that's great, right? And you can give some thought to what kind of a management team down the road you want to assemble, right, to compensate for you guys probably in this room don't have any weaknesses, but others may have weaknesses that they might need to compensate for. And then the other question was just in general.
Just as a whole.
In general, I guess in terms of the presentations, rehearse, just make fun of myself here to give you an example, right? Don't have slides that look like this, right? Just a couple bullets, hit the high points. If you have a co-presenter, and I'm sure there were multiple last year, but I can remember, and I think their thing was some kind of on-campus transportation. Yeah, maybe it was the scooter, and I can't possibly remember their names, although fine, standing gentlemen. I can distinctly remember that they were in rhythm, okay, and they complimented each other, and they clearly had rehearsed, and they clearly, I listened to them, and I thought, and I think I might have even said it, like they just, you sensed that they liked each other. It was fun to watch. It didn't seem rehearsed, but I can guarantee you that it was extremely rehearsed. And so they were fun to listen to, okay? And they got through their slides, and basically, you didn't get lost in their slides.
So we have time for one or two more questions, okay?
One more question.
So being like a former judge and being in the accounting field, if you were to be a judge, what kind of statements exactly, or what kind of numbers or details would you want to know about the business?
I think, right, so is this a business that exists, or is this a business that's going to exist? It already exists. Okay, so to me, I think that is somewhat, maybe I'm wrong, but that's somewhat unique. Is that fair to say? Okay, so I think that can be powerful, right? To be able to speak to the fact that, and ideas are great. So I'm just kind of thinking as an anal retentive accountant, right? If I know, hey, this guy's already doing this, right? This is happening. Then I think if you reveal that, then you should be ready to speak to, I think it's always good to talk about things that you've, challenges, maybe don't say failures, but challenges that you've overcome, what you've learned so far in the process to get to the point that you're at. So I think that can be pretty powerful. And then I think you can use that, to use one of the words we talked about before, historical experience, right? You can use that as a jumping off point for the prospective financial information. And there, I think, like I said, as an accountant, I might down the road be interested in seeing a more granular level, but I think even for an accountant, if you're presenting a forecast or a projection, I really think you want to have it high level, just a couple lines. So top line, revenue, right? And then bottom line, profit, maybe a couple drivers in between there, maybe a couple bullets on key costs or key determining factors. But I would say keep it simple.
So you wouldn't want like an income statement? No,
I don't.
It's too much.
I'll say this: the only person who might want that is an accountant, right? And you might not have any of those on the panel, right? And even if you do, there's probably not more than one or something. So, and what's the other danger of presenting something like this?
People don't understand.
People don't understand, and even if you understood it an hour ago, when you're up on the stage and you're trying to look at 50 different numbers, right? And it's small, it can you can get lost and you can get thrown off track. So I firmly believe keep it simple. I'm sorry.
No, it's for, people will see, they're, I'm boring, so they are not like attracted for the idea of the business.
So that's an excellent point, right? So what he said, for those that didn't hear him, right, is some people in the audience when you have something like this, they're going to tune out. Whether you know your stuff or not, they're going to just be, boring. When do I have to pick up my kid from soccer practice? Look at my phone here, right? Yeah, I agree.
Awesome. Well, it looks like, I'm sorry, that's all the time that we're going to have right now. We still have a couple of announcements to get through later on. Was this helpful at all?
Yeah.
Yeah? Can we show some
Like I said, if anybody has questions, you have my contact information. Feel free to call or email. I'll
And
do
just
my
to
best to respond.
Just to show our appreciation, we got you a little something.
Oh, you didn't have to do that.
Thank you so much.
Thank you.
All right, one more round of applause, Mr. Bill Foot.
Good luck, everybody.
All right, guys, I'm feeling a little attached. We've had a couple of workshops together now. We're coming to a close.
Yeah,
aren't we?
guys, what, 5th workshop?
Yeah, that's
We got rehearsals right around the corner in about 2 weeks,
yeah.
right? And I'm excited to announce that the next workshop is going to be hosted by us.
Yeah.
We're doing it. Presentation tips and tricks.
Presentation.
Who's nervous about giving a presentation? I know I am.
Really?
So-
I know we were.
Yeah,
That's
so
crazy.
next week, presentation tips and tricks is going to be us two up here talking to you guys. And
Something else that's really important. We want to kind of have a picture to remember you guys by. So
Yep.
please wear the shirts that we had given you last workshop. Does anyone not have a shirt? Perfect, because we love you guys. We remembered. Okay, so
yeah, we want to
next-
take that picture because not everyone's going to be going to the competition day.
So yeah, we want to remember.
That's just the reality of
We
it.
want to remember everybody.
Okay,
We
so
wanna remember
we'll be like,
everybody.
for those who are no longer with us, we'll have a picture of you.
We'll have a picture of you guys to remember you by. Okay.
Yeah.
Also, do you have any questions for us pertaining presentation tips and tricks? That way we can just know them ahead of time.
Oh.
Try to tackle.
Wait, also, we're also going to give you guys certificates next week, and then you guys get to hold your certificate and take a picture of us. And also, one of you guys asked us in our email. So after the presentation for rehearsal, your like PowerPoint or Prezi is due November 3rd. That's a Sunday by 12 p.m. After that, we'll no longer accept it. And so that's for the rehearsal. And after the rehearsal, if you make it and you get to go on to the final competition day, we're going to let you edit that presentation again. And that's going to be due November 13th. That's a Wednesday, okay?
Very important.
So-
yeah.
Oh, where do you turn it in?
Email us.
Yeah, email us,
Email
MC
us.
Raptor Tank. All the emails that we've been sending you at the bottom, we have all the instructions. Yeah.
Yeah.
Go ahead.
How
Okay.
many slides should be in presentation?
I'm sorry?
How many slides should be in
Like-
presentation?
Awesome question,
Yeah.
actually. Very awesome question. So that depends on you. Just keep in mind you have 5 minutes.
Yeah.
So if one slide is just a picture, that's going to go
Like
by
average.
on average. Again, that really
Yeah,
depends,
that
that really depends
There's,
on you.
yeah,
And
it
it's-
really depends on the person.
It's because, Nong and I can just have a picture of this financial statement and just keep talking and it still be really engaging, whereas someone else might have 7 different pictures.
Yeah.
You still get the same amount of slides in the 5-minute presentation. It's just a different feel to it.
Yeah.
So I would recommend looking at the previous contestants and seeing how they do it.
Yeah, and also note that, like Mr. Stilling said last week, if you guys include a video, that's also going to count toward your 5 minutes.
Yeah.
So, 3-minute video, that's going to put you down to 2 minutes for you to actually open your mouth and talk.
But you shouldn't have like 27, 30 slides.
Yeah.
It's a 5-minute presentation.
Yes.
Oh, what is the winner going to be based on?
The what?
Like, is there like criteria that we're going to be based on?
Awesome question. Do you guys remember the info session?
Did you guys watch the info session video? Because we gave you guys the judging criteria that the judge used. Yeah, we sent you guys an email about that. We'll send it to you guys
We'll
again.
send it. Yeah, we
Yeah.
can resend it. We can resend
We'll
it.
resend it definitely.
Did you send it already? Or?
Yes.
We sent it like breaks
It's
ago.
actually and it's actually included in the intent to participate.
Yeah. And that form basically has everything the judge is gonna judge you by. So take a look at that. You'll be good. Yes.
So are they weighted differently or is it all weighted the same?
To be
What do you
honest,
mean?
I would.
Is one, maybe like one line is seem organized, is that weighted less than had a solid business?
I think that's really up to the judge. To be honest.
So
The way I would say it, everything is weighted the same. So I would
Yes.
put like emphasis on everyone and try to be perfect in every category.
we
Yeah.
have a question over here.
Yeah. So in our team is 3. So we have to, 3 of us go to the podium if we qualify and present, or
Right.
it can be just 2 or 1.
So if you're a team, you can present as a team. As we were saying earlier with the scooters, they came up on stage. That's what he was saying. While they were up on stage, they can basically like finish each other's sentences. So yeah, that's
Yeah.
perfectly fine.
So
Do you guys like? Do all of you three want to go up?
No, we are planning just like 2.
Oh, okay.
That's fine.
Yeah, that's
That's
fine.
fine.
That's fine.
Yep.
You can have anyone that go up.
Yes.
It's okay.
So you said wear the shirts next week, right?
Yeah, wear the shirts next week.
Wear the shirts next week, yes.
And then there's like a week in between rehearsals and the actual competition. Is there just like nothing?
Nothing's going on. That's for you to edit your stuff and then
And-
send it to us by that Wednesday.
That's also
13th.
prime time for you to ask questions. Please, please, please ask us questions.
Yeah,
when you're
especially
home.
if you make it. Please keep asking us questions.
In terms of video, do we have to give you guys like an MP4 format or like is link fine or what's the requirement for the video?
I don't know, but include it in your PowerPoint, like on a slide, that video, and then send it to us.
What do you mean?
Send us the. He's asking us like the type of file, like is it MP4 or what?
So the video should be included in the presentation.
Yeah.
You know, while you're up on stage, you won't be able to go, okay, now just click on the link and then do this, that, and the third. It should pop up with your presentation.
Are we gonna be asked questions during the presentation?
Yeah.
Not during
No,
the
not during.
presentation.
Oh, okay.
After
No one's
the-
gonna cut you off in the middle of the presentation.
No.
Ask you a question. That'll come after.
That would be rude.
And also, the question is like when I was last year, I was actually like being mentored to take on this role, and I thought they were gonna ask like some Shark Tank like questions, like they were gonna be like, if you don't have your financials right, they're just gonna be like. But that's actually not what happens. The judges are actually really, really nice, and they ask you, they baby you guys, so they ask really, really soft questions, but it'll get you thinking. So yeah, don't worry about the.
That's not to say that you can slack.
Yeah, no, that's absolutely
That's
not.
to say-
But that's not to say that you should be, worried about it either. Just nail the presentation, you'll be good.
Okay.
Yes,
Where can we find you guys on campus?
we're everywhere.
We live in the humanities building, though.
Yeah.
You will always see us in the
I've never
humanities
left the
building.
humanities. I live here.
If you guys put in the chat, hey, are you on campus? Like the group me, everybody's on group me, right? If you put in the chat, hey, are you guys on if you ask me, hey, are you on on campus? I'll be like, yeah, I'm in the humanities building. This is where I am. What do you need? Okay.
What if I will make nice presentation but fully answer the questions? It like counts.
Awesome question. So keep in mind, yes, the judges judge you, but you also have the audience voting.
Yeah.
Okay? The audience sees both the questions and they see you present.
How many times are you gonna qualify?
Huh?
How many times are you gonna
Just once.
qualify?
After the rehearsals, you're going.
No, after Sunday that we send you the presentation. Because you said not everyone is going to be able to.
No. Listen, guys, just to clear this up. On Sunday, November 3rd, you send us your presentation. That's for us to load it up beforehand, before your rehearsal. After the rehearsal and you go up and you do your thing, you say whatever you need to say, then the judges pick, okay, he's going to go to the competition. Did that answer your question? So you sending us the presentation, we're not going to judge you like, he's going to get to go. You're going to have to go up and present, say what you're going to say.
And that also gives
Then-
us time to look at your presentation and be like, hey, this looks a little
Yeah.
iffy. You might want to change
It's
this.
just so
before
we
you
can
go
have it
present.
and load it up beforehand, yes.
Well, you said the judges will be at rehearsal.
No, mock judges.
Oh.
Like you see the people sitting in the back, those are the people that are going to
Right.
judge you guys. So yeah, not the actual judges. The actual judges, they're going to...
Okay, you guys are off. Everything's over. If you don't have any questions, feel free to go take
Okay.
some food. But
Yeah.
we're just here to answer questions right
Okay, we'll be here.
now. Okay? What's going on?
You guys have any
Which
questions?
students are gonna vote for the people?
You have an audience of around 300 people that are going to be watching at the actual competition.
Oh, so
And more people at home. We're live streaming it.
okay. So